Hello, everyone. My name is Lauren Antone, and I'm the Senior Marketing and Events Coordinator at MAR, as well as the producer of our free webinar series. Our webinar today is Mass Housing Programs for Your Clients. This webinar will cover Mass Housing's down payment assistance loan, as well as other Mass Housing programs, like the purchase and renovation loan, perfect for the fixer-upper. After our live session, the webinar will be recorded and added to our website at marealtor.com. If you have any questions throughout this session, please type them in the bottom of your chat box on your screen, and we will hold a Q&A afterward. Our presenter today is Lisa Fiandanca. Lisa currently holds the position of Mass Housing Director of Homeownership Production. She oversees the agency's efforts to provide affordable home mortgage loans to low and moderate income residents, as well as the agency's relationships with partner lenders that originate Mass Housing loans. She also oversees the agency's business development department. Lisa joined Mass Housing as a business development officer in 2005 and has 37 years of experience in the mortgage lending field, having previously worked for Republic Mortgage Insurance Company and East Boston Savings Bank. Now over to Lisa.
Good morning. Thank you, Lauren, and thank you to the Mass Association of Realtors for inviting Mass Housing to your first ever remote webinar for everyone. Just really pleased to be here, and I really would like to recognize the importance of the relationship with Mass Housing and the Mass Association of Realtors and all of the local realtor associations. We realize you're often the first people to speak with first-time home buyers, and your professionalism and expertise guides the buyer and the seller throughout this home buying journey. What we're hoping today is to share with you some of the new innovative things that we're working on at Mass Housing, and also provide hopefully a refresher for many of you who have been working with us across the Commonwealth as well. So I'd like to begin with just assuring you that throughout this pandemic, throughout this remote work environment that we're all in, Mass Housing is 100% operational. Never missed a beat throughout, going from everyone working in the office to one day sending everyone home and figuring out all of this technology, which some days we're more successful than others, but hopefully today will be one of them. So our entire team has been remote. This is over 300 people working at Mass Housing with our home ownership division, which I'm a part of. So what I'm sharing today is our programs, our services, and what we've been doing during the pandemic is still developing products to meet the needs of the consumers throughout the Commonwealth. Our mission at Mass Housing is to confront the housing challenges facing the Commonwealth to improve the lives of its people. And I hope as we go through the PowerPoint today that you'll see that many of these programs certainly will do that, but I'm hoping that this is also the start of a dialogue to hear from you on what we can do differently, what you'd like to see Mass Housing offer and partner with you as realtors, and how we can all adjust to new business in 2021. So I've already gone through a little bit about who we are. As a quasi-public agency that started in 1966, we're charged with providing affordable housing in Massachusetts. We're very mission-driven, so very different than many of your other partners that you work with. But how do we finance our loans? Well, we don't actually originate the loans ourselves. We work with over 150 lending partners, so banks, credit unions, and mortgage companies who offer our program. So we act like the investor. We have the money, we have the programs. We offer it out to our lending partners. They offer it to consumers, so they originate the loan. We give them the different pricing that they can offer. And once that loan is closed, they sell that loan to Mass Housing. So during the process, when someone decides they'd like a Mass Housing loan, they're working with one of these partners. They're giving them all of their credit information, all of their employment information, and that lender is following our guidelines. They close the loan, they sell it to us, and the consumer pays Mass Housing. So we're located at 1 Beacon Street in Boston, and we service over 19,000 loans. So people can actually pay online with us and contact a Mass Housing representative in person, someone who's here in the Commonwealth as well, to ask any questions. Our website is available in Spanish and Portuguese also. We recently launched a brand new program called Workforce Advantage 2.0. So you may have heard of Workforce Advantage previously. What this offers is a discounted interest rate to income eligible buyers who are buying in specific communities across the Commonwealth. I'm going to give you a little bit more information about how this works, but what we've been really pleased with is that MassHousing is really the only statewide down payment assistance program. So we offer down payment assistance to anyone purchasing in the Commonwealth who's income eligible. And we'll get a little bit more into what do those income numbers look like. Many of you are across the state and you're thinking, well, what's that number in Brockton, or what's that number in Springfield? And we'll share some of that with you as we go through this. Apologize with the technical difficulties. There we go. Sorry about that. Down payment assistance. So someone can finance 100% of the purchase of the property with MassHousing. So if they're purchasing in one of the 26 gateway cities, which I will share with you a map shortly, they can get up to 5% of the sales price of the property, or $25,000, towards the down payment. So they can finance 95% on a 30-year fixed rate mortgage and the 5%, or $25,000, on a 15-year mortgage with a 0% deferred loan. So where can someone borrow up to $25,000 at a 0% interest rate? So they will give us all of that money back, but they're going to only have to pay MassHousing back when they sell or refinance or pay off their first mortgage. So there's no payments due on this loan. Pretty remarkable that that's something that you could still, in today's environment, borrow 100% financing and get 5% as a 0% deferred. So what do some of those income numbers look like? So if someone is a first-time buyer, they can take advantage of a MassHousing first-time buyer program, earning up to $113,300 in many areas of the Commonwealth. This is by county. So this is a different program. So we just looked at Workforce Advantage. Now we're in first-time home buyer. So this allows someone $15,000 versus the $25,000, and they are paying us back at a 2% interest rate over a 15-year period. This is for first-time buyers only, and we allow credit scores between 680 and 700. So during the pandemic and during everything that's happening throughout the country, we've realized that MassHousing really has to be contributing to narrowing the gap of homeownership for people of color. We all need to do more. We realize that the median house value in Massachusetts is $419,000. And homeowners are paying 30% of their income on mortgages, and renters are paying more than 30% of their income on rent. We want to be able to contribute to people who want to be first-time home buyers having access to programs available throughout the Commonwealth. In Massachusetts, white households are twice as likely to be homeowners than people of color. There's a 34% point gap between white homeowners and people of color throughout the Commonwealth. This is something that we're very committed to closing this gap. This is a chart that will show you from Hispanic, Black, Native American, people that have reported as 2 or more races, or Asian, their likelihood for their home ownership rate throughout the Commonwealth. Gateway cities. You've heard me mention that at the beginning of the presentation, and you may have seen a lot about gateway cities in the media recently as well. These are 26 gateway cities throughout the Commonwealth that have been designated by the state based on population and employment rate. And you can see that they cover the entire state. Many of these are underserved communities, and these are targeted cities for Massachusetts to increase home ownership throughout the Commonwealth. So while I showed you a chart with income limits of 113 in some areas and 101, we're not just for lower income buyers. MassHousing helps first-time home buyers purchase throughout the state. But it's not just first-time home buyers. So although you're hearing a lot about Workforce Advantage, it's a brand new program, and first-time home buyer programs, someone who's income eligible can still do a limited cash out refinance with MassHousing. and can earn income up to $153,900. So they can either be doing a refinance or they can be a first-time home buyer and be median income and still use the state's housing program. Operation Welcome Home is also a program for service members and veterans where they can also finance 100% of the purchase price. And in addition to getting down payment assistance, can also receive a closing cost credit of up to $2,500. FHA is a federally insured program. We also offer an FHA loan through MassHousing for borrowers who may not be able to get a traditional mortgage loan, or there may be some other flexible underwriting guidelines that would go along with it. So FHA is also offered. So in addition to conventional loans, federal housing insured loans are available through MassHousing with credit scores as low as 640. MassHousing programs are available for single families, condominiums, 2, 3, and 4 unit properties. All the properties must be owner occupied and remain owner occupied while they have a MassHousing loan. I did mention Operation Welcome Home as we were looking at our program descriptions. And this is financing for first-time home buyers that have incomes up to 135%. It's not only available for veterans, similar to VA, but it's also available for someone who's currently on active duty, a reservist, and National Guard, and Gold Star family members. As I started the presentation, I may have mentioned MassHousing is also a mortgage insurance company. And all of our loans are insured by our mortgage insurance company. And I'll share some information in a future slide about the benefits of the mortgage insurance with MassHousing. Operation Welcome Home has MassHousing's mortgage insurance and benefits, has a closing cost credit of $2,500. And if someone wants to renovate a property, because many of you know, as you're looking at properties with buyers and they're walking through and they may not look like the HGTV homes, they do have an option with MassHousing to renovate that property and get one 30-year fixed rate mortgage. Our mortgage insurance. You've probably all heard of mortgage insurance. Some of you may have some really accurate information about it, and some of it may not be so accurate. Mortgage insurance is typically required when someone is putting less than 20% down and they're purchasing a property. Mortgage insurance is offered through private mortgage insurance companies. And the bank or credit union, mortgage company, wherever someone's getting their loan, they choose the mortgage insurance company that they're getting this coverage from. It protects the lender in the event that the borrower defaults on that mortgage. So in the situation where someone's putting less than 20% down, they have a lower financial interest in that property. There's this insurance policy that protects the lender. So if the borrower defaults, the lender would not lose as much money if the property went to foreclosure. At MassHousing, all of our conventional loans are insured by us. We have a public mortgage insurance company, but it has a unique benefit. If someone loses their job, we will pay up to 6 months of principal and interest while they're collecting unemployment to help them during this time that's unexpected. It covers both the borrower and the co-borrower, and it can be used for 6 months during the first 10 years of the loan. So during COVID-19, boy, did we see unemployment skyrocket for so many people, and it continues to. People who are out of work and did not plan on being out of work. It's not someone who's unemployed, that was a self-employed borrower that typically is a seasonal worker who accounts for that, and it is prepared for that. This is people who had no idea come March, April, and May that they were losing their jobs. MassHousing, as of since March of 2020, we paid over $800,000 in benefits to keep people in their property. I'm really proud to say as of today, that's over $1 million in benefits that we have paid. How that's paid is it pays the principal and interest while someone is unemployed. They don't pay us anything back. We don't charge them anything extra. There's nothing added on to their loan. This is a benefit that really goes along with our mission to improve the lives of the people in the Commonwealth. So to help someone when they're not receiving their entire pay and they're struggling to make their payments, to keep them in their property is really our mission at MassHousing. It's not just to get them in the house, but it's to help them stay there when something unforeseen like job loss happens. Dream homes in need of repair. Wow, does that really happen every day? Everyone who walks in every property, they love certain things about it and other things they really can't see past. So how can Mass Housing help with that? We have a renovation option, which allows someone with a conventional mortgage loan to purchase the property and to build in the renovation costs into that original purchase price, build in a contingency, and then put down as much as whatever the program is allowed. So in the situation where someone's getting 100% financing from Mass Housing, we may be able to help them with renovation on that property as well, getting one 30-year fixed rate to purchase the property. This example shows someone putting 3% down. So a purchase price of $400,000, rehabilitation costs of $50,000, a contingency of 10% of the rehab costs. So we want to make sure that if they do run into any problems, that there is some contingency. If a contractor takes down a wall and there's a problem, there's some money there that can take care of that unforeseen situation. So to purchase this property and to do all the work is $455,000. If they were to put 3% down, which is $13,666, Mass Housing could loan them $441,000 to purchase and renovate the property. So at the closing, the seller of the property needs their $400,000. They'll get that both from the Mass Housing loan and from the borrower's $13,000. And that $55,000 is held in an escrow account by the lender. Inspections happen throughout the renovation, and the money is released according to contracts that both the lender and the homeowner have agreed to, and the builder throughout the process. They can take up to 6 months to complete all of the renovations. If they don't use the contingency, it's just applied to the principal balance just to pay it down at the end. But it's there should they run into a problem. This is something as a realtor, I think you'd really want to have in your back pocket for those properties that are in need of work. Be wonderful to get a first-time buyer in, but they're a little bit afraid of the rehabilitation and how to renovate that loan, that property, how to get it into the shape that they really want it to, and to be able to finance that. I always say that this program is really not for someone who has a weak heart. Someone really needs to understand how this works. They're not going to be moving in on day one. We would like them to work maybe with you to identify who are some contractors in the local area that they could work with to get prices, and then determine what are the things that have to be done to the property, obviously any safety and health issues, and then what things would they like to do to the property that would increase the value. Because obviously, if they're purchasing it for $400 and it's going to be $50,000 for the rehab with the contingency, it has to appraise at least $455,000 upon completion when all of this work is done. Not all Mass Housing lenders offer our renovation loan. It is a smaller list of Mass Housing approved lenders. And down payment assistance is available for first-time buyers who are income eligible. How does your customer apply for Mass Housing? They would go to our website. They can take a look at our top lenders who are on our website to find a participating lender. So they can go to masshousing.com. Our site is also available in Spanish and Portuguese. And home buyers can sign up for our newsletter. We receive phone calls every day at Mass Housing and emails asking about our products, how they can apply, and who they should work with. The list of our top lenders are listed on masshousing.com, and top loan officers who do the highest level of production throughout the Commonwealth. We really want to hear from you. So I have some questions for all of you as we go through today. And I know I've gone through a lot of information about our products and how we can help people within the Commonwealth, but how can we work with you to help the first-time home buyers? What are we missing? What do you think first-time home buyers need? What are their biggest obstacles? We thought they were down payment assistance, not having enough money saved. And we've been able to come up with programs that can help someone throughout the Commonwealth. What would you like to see us do or offer differently? And lastly, would you like a presentation for your office? So Lauren, if we can open up some of the chat, if we have any questions, or if we have some responses to my questions, that would be wonderful.
Absolutely. So thank you so much, Lisa. If you have any questions, now's the time to write them in your chat box. And it looks like we have some already. So let's see. The first one is, are there any FHA loans available for commercial property?
Um, I do not believe so. FHA was really started to help first-time home buyers many years ago. So I'm not aware of any products that would be available for someone purchasing a commercial property that maybe has some residential use. Typically, that's done through a local bank, and that would just be a mixed use loan that you'd be looking for.
Okay, and this is a just curious question. Noticed that the credit score range tops off at 700. If a potential buyer has a credit score over 700, does that make them ineligible for these programs? And if so, why?
That's a great question, and no, it does not. So what we were just showing you is sort of some of the benchmarks for our program. So for an FHA loan, our lowest credit score is 640. And for a mass housing loan with 100% financing, that's a single family or a condo, it would be 680. We do loans with borrowers with credit scores in the 700s and even 800s every day. We would really love everyone to have a much higher credit score, but we do have products available for people who have lower credit scores as well. But higher credit scores, always welcome.
And this question kind of ties into that. So, do you have any programs for lower credit scores? I'm assuming they mean like, under 640, or is that like your lowest?
So the lowest is the 640 for mass housing. That doesn't mean that someone can't get a loan somewhere else with a lower credit score. But at mass housing, we really feel like that's a good benchmark for us, for someone who's prepared to buy. We often think that if you have a credit score that's below that, maybe there are some things that you should be doing to get ready to buy, but today may not be the day to actually purchase a property. We'd suggest that those buyers start looking at speaking with the home buyer counseling agencies and credit counseling as well. But again, if someone still wants to buy with a lower score, many of our lender partners have other programs available.
So this next question is more of a statement. I have a buyer looking at a property used as a single family home, but is business zoned. Dorothy, do you want to follow that up with more of a question so we can get to the bottom of that? The next one is, I find my buyers are kicked out when there are multiple offers with an FHA loan. Again, I guess that's more of a statement. Tammy, if you want to elaborate a little bit on that. Okay, a question. Is first-time home buyer for only one house, or does it reset like FHA resets?
Sure. So first-time buyer definition is not someone who has not had ownership in a primary residence in the last 3 years. So that's a pretty standard definition across the industry. So if someone has not had an ownership interest in a primary residence in 3 years, they would be considered a first-time home buyer.
Are there any programs for older home buyers who are taking money out of a home sale but are trying to live modestly and save?
Okay, so I'm thinking a little bit about that. So if anyone of any age can use a mass housing loan. So someone could be older purchasing a property, and as long as they're income eligible could use mass housing. We don't do a refinance that is a cash out. So someone would not be eligible to get a mass housing loan if they're refinancing to take money out of the property. I'm not sure if that answers the question.
Okay, Richard said he wasn't sure if I heard this correctly. The mortgage insurance offered through Mass Housing doesn't cost extra, or did I misread that?
So Richard, the mortgage insurance through mass housing is paid by the borrower either monthly, or it can be lender paid, so it can be built into the loan amount. Those are the typical premium structures that we have. But the MI plus, which is the unemployment payment protection, that's the part that does not cost the borrower anything, is not anything extra. Okay. But I also, with Workforce Advantage 2.0, there is no mortgage insurance that is charged to the borrower directly. So we do have different premium structures for the mortgage insurance available.
So this next question is more of a future question.
Mm.
She says that the market is very competitive. Many buyers will be shut out by 3% down payments. Have you considered offering some sort of guarantee for a borrow that would make a low down payment offer, like less than 15%, more appealing to sellers worried about the appraisal or likelihood of the loan being approved?
This is something that we've heard for years, so I really appreciate that someone, is bringing this issue up and addressing it. I think mass housing in general, throughout the state, low down payment programs often are perceived by sellers as not being as strong as an offer of someone putting more money down. Mass housing loan does not take anyone any longer to get. The lender you're working with controls the entire process. So before someone is issued a pre-approval, I will tell you that these lenders have vetted them completely, just as they would for any other loan program. So they know that they meet all of the mass housing guidelines. They would not be giving them a mass housing pre-approval if they did not meet all of our income and program guidelines. So although there is a perception about mass housing or even any low down payment program and the strength of that buyer's offer, I can tell you with mass housing, we've currently in production, we've already closed over $550 million in loans in 6 months of the fiscal year. So these loans don't take longer for anyone to do, but it's really the comfort level that you as the realtor have with your loan officer that's providing that pre-approval, and how to explain that to the seller on the strength of that pre-approval. I really appreciate that comment on, is there anything that we can do on some type of a guarantee or something that we can issue? And you'll certainly take that into consideration, because we do understand that many of these first-time buyers, their offer may not be considered at the same level of someone putting some money down, and that is an obstacle. So thank you for that. That's certainly a takeaway for me.
How many years does a first-time homebuyer need to own a house without a fine?
So when someone's getting a mass housing loan, because of the way we finance our loans, which are typically through the sale of mortgage revenue bonds, and some of our loans are sold as mortgage-backed securities to both Fannie Mae and Freddie Mac, first-time buyers are signing an agreement with mass housing to occupy the property for the life of the loan. So they can refinance at any time, but should they choose to decide to rent that property or move out of that property, that's something that they should come to mass housing for a waiver or request for that, because they are, as a first-time buyer, agreeing to occupy that property.
Okay, so Dorothy commented back on her first. It says, I have a buyer looking at a property used as a single family home, but is business zoned. She meant, would it qualify for mass housing finance if a property is and has been used as residential but zoned for business?
That's probably a one-off for us, where we'd have to take a look at what the zoning looks like, what that appraisal looks like, what the property looks like. Is the highest and best use that would come back on the appraisal as residential? And it sounds like it's zoned commercial, but it's being used as a residential unit. So I'm glad to take that offline with the person asking the question and provide you my contact information, or someone on my team when we're done as well.
One obstacle could be hiring an inspector, especially if you need multiple inspections or end up having inspections on multiple properties after one is found unsuitable. Do you offer any assistance, or would you consider offering assistance towards these necessary steps? I think
Um,
he's referring to like inspections.
so if I'm kind of hearing what the question is that maybe you have a first-time buyer who's going through, multiple properties, gets the inspection back, and then decides it's not a property for them. And that happens multiple times. Lauren, is that what we think this question is, and that's a financial burden on that first-time home buyer?
I believe so.
Okay. So if that's what, and I certainly, can empathize with that, once they get the inspection back, there may be things that are, above and beyond what they're prepared to do when they walk away, and they've spent, several $100s multiple times on inspections. Unfortunately, that's not something that we're prepared to, either roll into another loan or to finance. The only thing that I can say is that since you can get up to 100% financing from MassHousing, perhaps the buyers, can use more of their money that they may have been planning for down payment to take care of some of those costs, and hopefully not too many of them.
So Mary Beth is wondering if you have a flyer or information explaining that taxes will likely go up after a rehab.
Do we have? No, we do not have a flyer that explains that. That's a really good question. We can look at including that in some of our home buyer trainings that we do as well, because it is something that I guess a home buyer should be prepared for. That your taxes will go up. They typically will be going up, consistently. So being prepared for that. MassHousing loans, we also escrow for taxes and insurance. It's a requirement for all MassHousing loans. So we are prepared to escrow for that right out the gate, and to provide escrow analysis annually to consumers as well.
This is a question for me. Will you be sending out a recording after this? Yes, this webinar has been recorded and will be available on marealtor.com. It's under the education tab. You can hit webinars and you can view all of the previous recorded webinars there. You'll also receive an email with the link to all of the archived webinars. So then, let's see. What are the current interest rates for each of these programs and the related cost of the MI?
Sure. So the interest rates are set by our lending partners. So any of the loan officers or lenders that you currently work with would be able to give you an idea of where our rates are. MassHousing interest rates are extremely competitive, especially when you're thinking about these are 100% financing, so there's not a lot that it's being compared to, because there are not a lot of other statewide programs available. So just to give you an idea, on a conventional first-time home buyer program today, an interest rate could be anywhere, and I'll just give you a rough estimate, 2.75 to maybe 3%. And again, that depends on whether the mortgage insurance is lender paid or whether it's monthly mortgage insurance. Mortgage insurance premiums are set by MassHousing according to income for the buyer. And typically our mortgage insurance premiums are lower than many of the private mortgage insurance companies. Again, because MassHousing is taking a stance that what we're offering is very mission oriented. We don't have shareholders that are looking for a return on their investment. We're taking all of the benefits that are coming into MassHousing and developing products and putting them back out to benefit the consumers as well. So our mortgage insurance premiums are either monthly or lender paid, determined by the loan to value. So the amount that someone is borrowing, how much they're putting down. So whether it's 5% down or 3% down or 10% down, and their income as well. But there's no risk-based pricing on our mortgage insurance premiums.
With the renovation loan, can the buyer still use DPA to cover that 3%?
They can. The buyers can use down payment assistance. So they can finance, much more than they would with any other type of loan program as well. That is a program that's going to take a little bit of legwork though, because the buyer would have to get the estimates from contractors to determine that they can purchase this property and apply for a renovation loan. So it is a little bit of a longer process. That's the only program that would be structured that way, because once someone finds that house for 400,000, they need to determine how much it's going to cost them to do the work that they'd like to do. So that's where they need the estimates. They're going to need a lot of hand holding from the realtor community and helping them get those contractors in for those bids, and then provide that to the lender to determine the maximum loan amount and what the value of that property would be upon completion.
Does mass housing loans preclude historical Reno loans?
I'm not sure what that question is.
Okay, Mary Beth, if you don't mind setting like a second question to that, and we'll get to the bottom of that question. Oh, it says, I am assuming all buyers have to occupy. Is that correct?
Yes, yes, it
Okay.
is. Mass Housing does not allow non-occupant co-borrowers or co-signers. And our programs are specifically designed for people who don't have access to other programs throughout the Commonwealth. So as I mentioned, you agreeing to occupy the property, we don't allow the co-signers on it as well. And what we'd like is when someone's in a position that they no longer need mass housing, that they want to rent out this property, give us our money back so that we can help someone else out who was in your situation when you were buying originally. And that's really the spirit of our program.
Is there a reason a loan originator would push for a mass housing loan? Any incentive?
No, they're really the difference in the pricing that they would earn on a mass housing loan may not actually be as much as they would be earning on another loan program. But we have many loan officers who share our mission, but also share that mass housing offers something that is really unique in the marketplace. So they're sharing that out with the consumer. Because if you want 100% financing, there are not many options. There may be city by city, but not statewide, that's for sure. So there's not a higher incentive for someone to do a mass housing loan. But we have some extremely loyal lending partners and loan officers who do a substantial amount of business with us that we're really proud of to partner with.
Are you offering virtual home buyer training now?
Thank you for that question. I almost forgot that completely. Yes, Mass Housing participates in home buyer education throughout the Commonwealth. So last year we spoke to, through this pandemic, virtually over 5,000 first-time home buyers who took virtual classes. Home buyer counseling agencies are approved nonprofit agencies that follow a specific curriculum. Everyone presenting at these classes are volunteering, and Mass Housing presents. We previously were in person throughout the state, and now we have been presenting virtually. And again, these classes are in multiple languages, Spanish, Portuguese, but we have presented in many languages across the state with interpreters as well. And there are classes that are going on every night and on weekends. If you have not participated in a home buyer class, I would really encourage that, because if you're working with first-time buyers and they're attending a class because either you've suggested it or the lender they're working with, so the loan officer said, because of the program you're getting, you need to complete a class. It's a requirement for mass housing law. We want someone to be prepared. We want them to learn about the process and actually learn about it even before they go out looking. So at the class, they'll hear from experts. So they'll hear from a realtor, they'll hear from a loan officer, they'll hear from a home inspector, possibly an insurance company as well, or an insurance agent. They'll hear from Mass Housing and learn about the entire process and the importance of building their team. And again, everyone that's presenting is volunteering, so no one's selling anything. It's informational purposes for the attendees. But if you have not attended a class, it's really beneficial for you to hear what everyone else that you're sending to these classes, or they're coming back to you saying, my loan officer said sign up for this class. What's actually going on at it? It may also give you the opportunity to reach out to that instructor, that nonprofit agency, and offer your services as well as realtors. So should they need a realtor to cover what is the role of a realtor in purchasing a property, you may be available to do that and participate in future classes with them. It's a really big misconception we've found at the classes when we've asked the participants, do they understand the role of the realtor? Do they understand who represents who? And for many, many years, we would hear the same thing from everyone at the classes, because they're first-time buyers. They never did this before. They would say, well, I'm going to just go to the open house and talk to that realtor. Why do I need someone else? It makes sense, right? Everyone else we work with, we work with someone who's selling something. So why wouldn't I just go to that open house, and whoever was sitting there, I would, if I liked that house, I would work with them. They also don't understand how someone gets paid. How do the realtors get paid? Why do they need an attorney to review a purchase and sale agreement? And as much as it's a very big time commitment for people to attend these classes, everyone always comes out of it saying that they were glad they did it. And many times we've heard, I wish I did it sooner.
So we have a great compliment. Someone said, thank you so much for the great information today. So glad we could bring this to you guys. Another question, what is the current time frame from application to approval and closing?
So MassHousing loans are controlled by the lender. So as fast as any of your loan officers that you work with can do any loan, they can close a MassHousing loan. It does not take any longer. This is a conventional loan. Same amount of time. Typically, we see rates that are locked for 45 days, 60 days, but that process, ordering the appraisal, that's the lender that someone's working with. They're ordering the appraisal. They're working with the attorneys that they work with on their list to order the title work. We're purchasing the loan afterwards.
What are the debt to payment ratios?
So typically, and I'll just give you sort of a ballpark on that, is the maximum debt to income ratio in most of our programs is at 45%. It may be lower on some, but it's typically, you don't want more than 45% of someone's gross income, so that's their income before taxes, being used for both the housing payment and all of their other bills. We don't want to set someone up for failure, so we really feel like people should be prepared. And that's part of the home buyer education class, that just because you can go to 45% debt to income ratio doesn't mean that you should.
So this is a longer question, but we still have the time, so we can get through this one. In this market and the price point for first-time home buyers, they are not competitive against other offers. I've had buyers make 8 or more offers for homes, even waived home inspections, and we're told that they don't compete with more money down or the risk of an FHA loan with the appraisal, etc. What other options do they have? Does DPA look any better in an offer?
Wow, that's something that's been going on, and we're seeing that being a real challenge for first-time home buyers across the Commonwealth of not being competitive in their offer, and going through multiple offers before they can even become the winning bidder on a property. We certainly would not suggest that someone waive a home inspection, and I think most of you would probably agree, especially for a first-time home buyer. And many of them probably feel like they're boxed in to be able to to do that if they really want the property. What can we do to combat that? Really just getting the message out that a MassHousing loan is just as strong as any other loan program, but the perception by the seller and the selling agent that more money down means a stronger buyer, that's a difficult one, I think, for all of us to overcome. And even with the education, I think we do the best we can with the real estate community to explain this. But when you have a seller who sees, someone putting 20% down and someone putting, 3% down, that perception is their reality to them. I wish I had a better answer for that, but it's something that's really high up on our list because we realize as that comment of, someone making 8 or more offers just sounds crazy, but we know it's happening every day.
Can you get a mass housing loan if you're not a first-time homebuyer?
Yes, you can get a mass housing loan if you're not a first-time home buyer. You would get a mass housing, it's called a mass housing mortgage loan. It's not a first-time buyer loan. It's available for someone making higher income, so up to the $153,000 income limits that I showed you earlier. And they would not be, if they're not a first-time home buyer, they would not be eligible for down payment assistance.
So Marybeth re-commented, to expand on her first question. So her first question was, does mass housing loan preclude historical renovation loans? And she says, there's a historical home renovation type of loan. I do not know much about it. I wonder which program might be better for a credit score client with for a good credit score client with down payment. Does that make
Okay.
more sense?
It does. I'm sorry, I didn't understand it it absolutely makes more sense. So if someone's purchasing a property that is on the historical record, so they must maintain that property back to a specific condition as it's been designated a historical property within Massachusetts. I would like to say, I mean, our loan can be used. I don't know if that's something that the Historic Commission within that community has any say in. I don't believe so. I think that the work just has to be within, certain guidelines. But where I think what to me is kind of coming to mind is what's the value of that property upon completion? And are some of the things that are being done going to increase the value of the property? Or are they just in line with what's required to continue to be on the historical register? So that might be a sort of a deeper dive on that question, to take offline.
Is there a certificate given after the homebuyer class? And how long is the certificate good for before a first-time homebuyer purchases a home?
Sure. So yes, a certificate is granted after the completion of the first-time homebuyer class, and it's good for 2 years.
If you owned a home over 10 years ago, would you be considered a first-time buyer?
Yes, as long as you have not owned within the last 3 years, then you would be considered a first-time homebuyer.
And I think that's actually the last question that we have. We had a lot of really, really great questions today. I'm so glad that we had extra time for Q&A because, oh, we have another one coming in. It looks like we've got, 10 more minutes left, so we can answer any more that you guys want to send our way. Is the rule for being a first-time home buyer only apply to a home owned in the state of Massachusetts? For instance, can someone who owned a home in California qualify as a first-time home buyer in Massachusetts?
This is something that we've gotten, especially more recently, and they cannot own a home anywhere. So in any other state or in any other country.
Okay, I'll give it a couple more seconds here if anyone has any more questions.
And as you're wrapping up too, Lauren, I have a slide that's up with our business development team, which many of you may know, many of our relationship managers who are our salespeople who work with all of the realtor organizations. Many of them sit on boards and committees. We're more than glad to participate in any of your office presentations and work with you with any of your buyers. I'd also encourage you to sign up for our homeownership production email so that you'll know when we're changing products and what's happening at MassHousing. And I'm sharing with you some information on where to find that link on masshousing.com. But please connect with us on Facebook, Twitter, YouTube, and LinkedIn. Would really like to hear from you. And we're also looking at ways to be able to capture more information about realtors who are the selling agents and the buyer's agents on mass housing properties and capturing that information and how we can promote a relationship with realtors who work with first-time home buyers on Mass Housing's website. So stay tuned for more on that. And we hope to have more on that in 2021. The way that we're promoting and sharing information about our top lenders and loan officers, we'd like to be able to do that with top realtors so that when consumers come to our website, we can start them on their journey with realtors who work with first-time buyers, who are well-versed in the state's affordable housing programs, in addition to the guidelines that go along with it.
Great, and I guess we'll just do this as our last question. Would any bankruptcy disqualify for MA housing?
So bankruptcies and foreclosures, Mass Housing would follow the same guidelines that both Fannie Mae and Freddie Mac um, would have in place, or FHA, for the amount of time and the reestablishment of credit. So whether it's the 7 years or 4 years, depending on the loan program, we would follow those same guidelines.
Great. Well, as a reminder to everyone, this webinar has been recorded and will be available to view in the next few days on our website at marealtor.com. Thank you so much, Lisa, for your presentation, and thank you to everyone who joined today. We hope to see you next time.
Thank you very much, Lauren, and thank you to the Mass Association of Realtors. It's an incredible partnership with Mass Housing, and I look forward to hearing from many of you after today's session. Have a great day.